Hey, crypto family. So I know today is not a fun day at all as most of the coins are in the red, down over double digits. And I'm going to go over some news articles as to why that is and a couple chart analysis that I think of where we're going for the future. So this first article here, it says by CoinDesk, Bitcoin price tumbles 10% as crypto markets flash red. It says the price of Bitcoin fell more than 10% during Thursday's trading session as the cryptocurrency erased a large portion of its recent gains. And then basically it talks about in the last 24 hours, total of $6.4 billion worth of Bitcoin was traded across exchanges as its total market cap fell roughly 7% from 70 billion to 64 billion. Now I want to touch on some of the coin's biggest losses, which one of them being Litecoin Neo and Cardano. If you remember my yesterday's video, I mentioned Cardano and I mentioned the RSI and how there was a sign for a big correction very soon. So on this 4-hour chart here, the same chart I presented yesterday in my video, I mentioned that both times, so the RSI went up to about 73.74, and you can see we had a big correction. Okay, and then it went up again around that 70 to 74 level, and then we had a correction. Now I mentioned again, we were coming up to this 73 to 74 level, and I said, hey, watch out, there's a correction that's going to happen soon. And what do you know, literally the next day or night, the correction happened. Little did I know it'd be a massive correction, but it was a correction nonetheless. Now, I mentioned that some key support levels to look out for were this 4.8 cent level. Then also you have 4.6 cent level here that I drew. So if you were thinking of buying in, then I mentioned, possibly looking at those entries, but you can see it continued to fall. And right now, the support I'm looking at is 4.4 cents to 4.1 cents right here. I see these as very good support levels. Now, again, that goes to show you with all of these crazy rises that we've had the past couple of days, it's always begs a point to put stop losses in and always, secure those profits, because just looking at the technicals here, you could have assumed that a correction was in the very near future because we were rising a lot. So again, that is something to keep in mind and something I always look out for when trading. But going over one of the next articles is it says, what caused Ethereum Bitcoin Cash to plunge 15% in less than 4 hours? So this article more so instead of Ethereum or Bitcoin Cash, basically I just want to go over the correction that happened with a lot of the altcoins. So with Ethereum, there's a lot of hype built around its Constantinople hard fork that is set to be executed between January 14th through the 18th. So again, it says over the past 2 weeks, Ethereum price nearly doubled from $85 to $160. So you got to remember, we were having these crazy gains over the past couple of weeks, and that usually tells you, when something feels too good to be true, it usually is. So again, it actually quotes here. It says, early as January 7th, traders, including the crypto dog, suggested that the technical indicators of ETH suggested a short-term downward movement. And he says, maybe I'm just seeing what I want to see, but this chart is screaming to me last chance to short ETH. It makes sense to see some bounce here given this level on the ratio, so I hesitate to say this is a great entry. I'm just thinking out loud, not trying to urge anyone to FOMO into a trade. Now, if any of you follow the crypto dog, he's a guy on Twitter and he's real good with technical analysis, so definitely look at giving him a follow, and he does present some very valid points. Now, again, it talks about how, a lot of these coins were overextended, and you look at the MACD almost crossing over, the blue crossing under the yellow, which is a sign to short. And then there's also a guy named Mark Dow, and he says, Mark Dow, a trader who shorted Bitcoin from its all-time high of 19.5 all the way down to 3,500, said if Bitcoin fails to recover beyond 3,000 in the short term, the market is in trouble. And I want to point out the reason he said that is if we go to the daily chart is because Bitcoin was that $6,000 level was such a huge support level for Bitcoin. So the $6,000 level is the top red line over here. And you can see multiple times, between 58 to 6,000, it's bounced. It bounced over here in June 30th of last year. It bounced August 13th. It bounced September 13th, October 15th. I mean, we had 4 times that Bitcoin bounced above 6,000. Now, once we fell through it, that becomes then that main resistance that we need to get past. So again, there's a lot of levels right now on Bitcoin that we need to look out for. I'll go ahead and cover some real quick. So on the 4-hour chart here, we can see I mentioned this 3,600 level was very important support that we needed to hold. First, we fell through this 3,800, which was support, and now turned resistance. So I'm going to change this line to red. But this 3,600 level here, we do need to keep this support because it is very important. If we don't keep this 3,600 support, then I do see us falling potentially to this 3,400, this or 3,500 could be temporary support, but mainly this 3,200 to 3,000 level is where a lot of that next strong support is. So again, if you are trading right now, always be careful, set your stops, because you never know if we could have another breakdown, but just something to keep in mind. And then also, Mark Dow also says, quote, still a beautiful chart. If Bitcoin can't bounce to at least 5,000 to 6,000 soon, it's a really bad sign for the cyber bulls. And if it breaks down through the yellow line at any point, even the hodlers need to get out. So again, a lot of people are saying, Bitcoin needs to recover soon. Short-term time frame, I'm thinking, 2 to 3 months. If it doesn't get above 5,000 to 6,000, then we are definitely in trouble and could possibly be going even lower. Now, on a more brighter note, there's an article posted by thenextweb.com, and it says cryptocurrency analysts predict the end of the Bitcoin bear market. So a company called Delphi Digital is an independent research boutique specializing in the digital asset market, which they've studied Bitcoin transaction data and market prices, calculating that Bitcoin investors are, for the most part, done with their selling. So long story short, it's a pretty long article, but basically goes over UTXO transactions, the sell exhaustion. So basically, most of the sellers have sold their Bitcoin. There's not much more sell volume to go. And they basically also look at Bitcoin wallets, which they have this graph here. And it says, here's an example of Delphi Digital's charting method. The black squiggly line shows Bitcoin's price, while the colored squiggly lines represent the UTXO age of Bitcoins. And said, so the green line tells us what percentage of Bitcoin circulating supply, currently 17.5 million, has not been used in a transaction in the past year. So the blue line gives us how many Bitcoin haven't moved in the past 5 years or more. And you can see that blue line, you can barely see it here, but it has been steadily increasing, which is good, meaning basically people are accumulating. It says, but check out that blue line. It's pretty much been on the rise since 2014. The first year Bitcoin could have a UTXO age of more than 5 years. It says the idea is to apply this kind of analysis to the most recent price decline. If we can figure out where the selling pressure is coming from by tracking UTXO age, it's easier to approximate how close we are to selling exhaustion. So again, they are assuming that most of the selling is finished and that Bitcoin will bottom out within the first quarter of 2019. Now, that's a bold statement right now to make. And I mean, it's some good analysis that they're doing with all these different variables. But again, always remember, never trade what you can't afford to lose. So it could possibly be the bottom, during this first quarter. I'm thinking we still may visit that $3,000 level again in Bitcoin, maybe even a little bit lower than that. But again, anything is possible right now. We could bounce from here and the bottom could already be in. So hopefully that's the case for now. But again, with the market as it is right now, it's just always keep your capital safe, even sit on the sidelines. If, what I like to do is actually average in. So for example, say you bought Tron at 1.3 cents and then Tron goes up to 2.6 cents. Well, maybe, hey, sell half of your position and then, kind of keep that extra and let it ride so at least you have your money back. But let's just say Tron falls, okay? Or like Bitcoin has fallen. Well, if you have some money on the sideline, maybe invest 50% of that capital into Bitcoin and then hold the other 50% maybe for another drop. That way, if Bitcoin rises, okay, you still have half your money in there, so you're able to catch the profit on that rise. But if it falls, okay, cool, I still have some money I can invest it in, towards the bottom to get even a better price to average in at. So that's the name of the game, averaging in. And always, I know there's DaVinci 15, J15 actually talked about this little old lady method. Basically, once you've made your 100% return on your investment, sell that part of your investment. That way the rest of it is just profit and you're letting it ride. So especially near the bottoms here where a lot of these coins are right now, that's definitely a good strategy I like. And especially it's with the way the market is, how volatile it is, once you're in a profit, take some of that profit off the table. So, you're not as stressed because a lot of new traders are over leveraged. And that's the reason why they're so stressed, because they're putting in too much capital that they can't afford to lose, or it makes them too nervous. So that's something to keep in mind. If you are feeling nervous, take some out, only invest a small amount. So with that, if y'all enjoyed this video, please give it a like, comment if you have any questions or you like the video, and then please subscribe if you haven't. Really appreciate it. Until next time, thanks for watching.